Adam's the next speaker, and he's from Rabo AgriFinance. And Adam's a graduate of the University of Rhode Island with a bachelor's degree in aquaculture in 2002. And he worked at the University of Florida Shellfish Aquaculture Extension Office and graduated with a Master of Agribusiness degree before joining Farm Credit of Central Florida in 2006 as a credit analyst. He's been at this game for a bit and has seen a lot of perspective or gained a lot of perspective from working with lots of producers through their finances and financial planning. He graduated from University of Florida with a professional MBA degree in 2009. So then joined Rabo AgriFinance in 2011. So most of Adam's career has been spent analyzing the financial statements of agribusinesses to provide capital for them to operate and grow. He enjoys fishing and spending time outdoors with his family. So Florida is a great place to do that. And he's married to Amy, and they have two daughters, Peyton and Paige. And so Adam has sent us some comments that we'll share, and he'll join us live at the end of the presentation for some Q&A. So Adam, thanks for joining us today, and we'll get this spooled up.
Hello everybody, my name is Adam Trott. I'm the Financial Analyst Manager with Rabo AgriFinance in the Southeast region. And I'm going to talk to you today about financial planning for a new generation of farmers. First, just to give you a little background on myself, I've been a financial analyst or a credit analyst for farmers for about 15 years now. And what that means is essentially that I analyze the financial statements of farmers in an effort to get them capital to operate and grow their businesses. And in that role, and during that time, I've had experience with small operations from just needing a $50,000 operating line of credit to $100 million loan facilities, and even had the opportunity to at least analyze and work on wholesale level billion-dollar facilities as well. So most of that time, though, is loan relationships, I'd say, between $3 and maybe $12 million is the majority of what we see, or what I've seen. And today what I want to do is share with you some of that experience that I've had and what I've seen as it relates to financial planning and success in the long term for farming operations. And I thought really hard about it, and really just wanted to, what I did is came up with the one thing that I really want to get across. And that's really the thing that I see that kind of separates the hobby farm all the way up to the industry leading business. And that's not necessarily on size. Always, I mean, you can determine the size that you want to get a little bit. I mean, economies of scale and things help, but really, just mastery of what I'm going to talk about today is one of the things I see that sets those businesses apart, and also gets the longevity as well, and gives you a full picture of what you need to do, because financial planning is a huge topic, and I didn't want to try to touch a lot on a little bit of stuff. I really wanted to kind of dive deep on one topic that I thought would really make a difference. So what we're going to do is we're going to talk about the tools for financial planning and management, how and when to use those tools, and why do I want to use those tools? What's your goal in using those tools? So it's a little high level. Might not be asked to do this again, just because, as you can see, these tools all involve accounting. But I promise you, we are not going to go over debits and credits or anything like that. This is essentially, I want you to understand that there are these different types of accounting. Each one of them has a specific goal and different rules to be able to achieve those goals. And that's really what we're going to talk about today. I mean, as an entrepreneur, you all have to do and know so much depends on you. from managing people, equipment, inputs, production, everything. So you don't need to know how to do this deep dive, each one of these. Each experts in these fields don't know how to do all three of these extremely well, but you do need to know what they're used for, and that they have specific rules to achieve certain goals. And just being able to understand that and not trying to use one to accomplish the others is really important. So just understanding this dynamic is really the biggest thing I'd like for people to take away today from my discussion. So first, we're going to talk about tax accounting. Tax accounting, we all have to do it, or we go to jail or have a big fine. So everybody has to do this. The goal of tax accounting really is to lower your tax liability, so you can keep more money in your business to grow and prosper. So there's a lot of specific rules that are designed to help you lower your tax liability. And there are a lot of tax experts, and I definitely would recommend talking to an expert when you're talking about tax planning. Now, there's a couple things. So, I mean, the big ones is you can use cash versus accrual accounting methods, which definitely helps lower your tax liability when you're growing a business. It might hurt a little bit if you're shrinking the business. And then also when you're transferring assets with like succession planning and thinking of things like that, of that nature. And also just during your annual, buying inputs and things like that, being able to prepay things to lower that tax liability again with cash accounting and a growing business will really help you. But you don't want to use this, one, to try to attain capital, and two, to really manage the profitability, understand the profitability of your business. That is not the goal of tax accounting. Tax accounting, again, it is really just to lower your tax to meet the government's requirements, but then also to utilize the rules that are out there to lower your tax liabilities. CPAs are experts with that, and you probably do want to use a consultant or a CPA. If it's a very simple, if you have a very simple operation, it's definitely something you can do on your own. But as you get more complex and a bigger business, is definitely something I see. Most farmers are using CPAs as to do their taxes. The problem here is that I see is where they're also trying to attain capital for their business, and you can see that those goals, and which I'll talk about here in just a little bit, are completely different, and there's different rules. The next type of accounting and tool for financial management that I want to talk about is managerial accounting. This is something you guys are probably all doing and know, and maybe didn't even know there was a term for it, or had a different name for it maybe. And it is something that I see that we could also, a lot of farms could improve upon, and it's very difficult, especially in agriculture, because we have different, different products, different business models, and allocating costs and revenue can be very difficult. But once you're able to do that, there is a lot of interesting analysis and to really help you maximize your profits. And that is really what managerial accounting is all about. That is about maximizing your production, lowering your costs per farm, per cow. And so, and in managerial accounting, you'll see what's called KPIs, key performance indicators. It's a lot of kind of mostly different types of ratios and things like that, where you can compare yourself to other industry standards and things like that, and kind of see where you can improve and where your competitive advantages are, so you can take advantage of those. This is really exciting and fun stuff, I think. It also really helps us with making projections as far as the performance of the farm, and especially when you're doing growth and things like that. So it really exciting stuff. A lot of different rules to be able to utilize this stuff. I think the hardest part is being able to take the historical data that's coming off of your farm and organizing it in a way so that you can use it to achieve these goals. And totally different than tax accounting. Really heavy on the production side of things as far as actual numbers, yields, things of that nature, as well as costs and revenue. So again, there's experts in this. I think probably a lot of you all are pretty good experts at this already, and are doing this in some form or fashion, but it is definitely something, a tool that you want to have and continue to improve on, because we can always improve. And I do know that one of the biggest struggles I see is being able to take that cost and revenue information and be able to allocate it to where we need it so that we can perform this type of analysis as well as some of the production. But there's some great software out there, especially in the cattle industry, to help with some of that. So that's managerial accounting. The last tool that I want to talk about is probably the most important for the financial industry. It's the most important for when you need third-party capital or reporting to other owners, equity. This is how you would actually evaluate the financial health of a company, and it's called financial accounting. This will also is a great tool to help you understand the risks in your business as well, financially, as well as when you're growing, the risks that it might put on the company. Also, being able to master this will allow you to be able to have capital when you need it. And I think this is really important because a lot of farming businesses do rely on capital, whether that be bank loans, family money, or equity investors, things like that. If you're relying on third-party capital in any form, you really should be doing this, and you should be doing financial accounting even, if not just to understand the true profitability of your business as a whole, as well as the riskiness in your financial position. So let me talk a little bit about financial accounting. Essentially, it is typically done on an accrual basis. The difference between cash and accrual is when you're recognizing revenue and expenses. Essentially, cash basis is just when it comes in and out, and while accrual is really matching that revenue with those expenses. Again, so that really helps, especially in agriculture, where we don't have our expenses go beyond a fiscal year, maybe. We have a lot of different cycles, and so it can be very difficult to be able to allocate these costs with the revenue. There are several firms that definitely specialize in it and have gotten pretty good. But this will really tell you, because cash accounting is not going to tell you if you made money year over year. However, accrual accounting will. And accrual accounting will also tell you if those profits were enough to satisfy the amount of debt that you need. So those are a lot of the things that an ag lender is going to be looking at, especially in our regulatory environment right now. It's very important to show cash flow from sustainable sources on the farm. And that's really, I'll tell you, is probably one of the biggest things that a relationship lender is going to be looking at to ensure. And that is not only to protect for our regulatory purposes, but that's also to make sure that we're lending responsibly for you all. And because we always really like it when things are easy and everybody's making money. I'll tell you what. But it's a real good indicator. I hope you use your lender as to talk to them about what they're seeing the risks in your business are and ways to improve. And I definitely recommend talking with them about this. But this is financial accounting. And that's the reasons why you really want to use it. Another major thing, on the balance sheet is your leverage. How much debt are you employing versus how much equity is paying for those assets that you have. That also then kind of flows over to how much cash flow, because that will probably result in more debt service requirements annually. Those are the main things that a lender is going to be looking at, and really anybody that's a third party that needs to understand the financial strength of your operation. So really, again, let's see, we'll sum up here a little bit on the last slide, but the main thing that I really want to get across is these are 3 different tools. They all say accounting, but I think it's great to be aware that they have different goals. Each one, tax accounting, we're trying to lower our taxable profits. Managerial accounting, we're really trying to maximize our profits and understand our costs and key performance indicators. And then, financial accounting, we're really trying to do accrual-based accounting and trying to really understand the profitability of the operation as well as the risk. And risk increases as you have more debt that you rely on. Each one of these tools, again, don't try to use them, use your tax accounting and try to use that for all your other, especially, financial accounting. It's a very different thing, different rules and different goals. But if you're able to do this, and you understand the different goals and you're using the rules to achieve those, you will be lowering your taxes, increasing your profits, and having the capital available to you when you need it, either to get you through a period or and grow your business, or just have a sustainable level of financing in the business. And that right there is probably the most important thing that I wanted to get across today. I know you might not be able to be an expert. I know I'm not an expert in each 3 of these. You don't have to be. But knowing how to use them for an entrepreneur, I think, is the most important thing as far as financial planning goes. So that's really it I had for today. I hope you find that useful. My name is Adam Trott, again, financial analyst manager for Rabo AgriFinance, and I will be here for any questions on anything as it relates to this, as well as ag lending in general, or anything I can help with. So appreciate everybody's time today, and thank you very much.
Adam, thanks a bunch, and I think you're going to come on live with maybe a few wrap-up comments to go with that. And welcome, appreciate that very much. I might start off with just a real quick comment. One of the most useful classes I took in graduate school was actually a managerial accounting class, and I think I maybe shared that with you before. Painful at the time, but as a skill set to develop. I think you're dead on for young producers to, develop some of those accounting and financial management skills. You can't just rely on your accountant to do that. And so being able to come in and have a good conversation with a lender is a really important skill set. And I think, it's interesting we have you on now, and you've been slotted for a talk for months and months and months. But on the back end of the COVID pandemic and some volatility across the ag sector, no time like the present, right?
Yeah, that's right, Bob. Thank you for having me here today, and BIF as well. It's definitely been a really crazy time in the financial sector for the last few months with everything going on. It's definitely kept us really busy, that's for sure. Interest rates are low as well, which is kind of exciting, and opens up for a lot of opportunities as well. I did want to just kind of mention something I really took away from Bill Reichel's talk. I really liked one of the quotes he had there, which was, "If you can't measure it, you can't improve it." And I thought that really goes a long way with in many aspects, but especially when it came to knowing your financial performance and using financial accounting there to actually understand your profits. And if you're not measuring it consistently and actually looking and actually setting goals for yourself, you're not really going to improve it there. And so continuing to work on improving your financial accounting to understand financially your capital position, and then setting goals to try to see if you're actually making progress there, I think is really important, and something that I hope people take away from today. And with that, using your lender and making sure that you have a good relationship with one, because when you need it, it's really good to have some familiarity. If you don't really need to borrow some money, or you've got a term loan that's not really at the time, you don't really need much from your lender, but having that open and that relationship is actually is a really good thing to have for when you do need it. So if there's any questions in the chat or anything that anybody has for me, I'd be happy to answer anything. Bob, can you hear me?
Yeah, Adam, thanks. We were breaking up for just a little bit there, and I'm not sure if maybe we'll conserve a little bandwidth through your end.
Bob, can you hear me? I'm sorry.
Adam, are you still there?
I'm here. Yeah, I tried to turn off my video to see if that helped at all.
Yep, that helped a bunch. I was just going to suggest that everybody must be home from break or something and crowding the internet on your end. But yeah, I think some of those planning skills are really important. Let's go to our Q&A here and see what we've got. One of the ones that I saw that came through was a question about some software and a recommendation for CalCAF managerial tracking. So maybe integrating sort of the costs and financial records side on a CalCAF system.
Yeah, well, I couldn't recommend a specific software to be using, but I can tell you that is probably one of the hardest things that I see is for a producer to be able to allocate those costs effectively so that they can actually use it to perform analysis on the profitability and efficiency of their operations. But if you do have something, I'd be very happy to look at it.
Yeah, now one of the ones I was aware of through some extension work. I know Oklahoma State's got a kind of a chart of accounts built, I think, to go into either Quicken or QuickBooks to kind of help producers do that cost allocation, because that's as you start thinking about, and you mentioned a bit of the kind of enterprise view, enterprise accounting, that's a really important bit to be able to sort of divide the costs up. And some of the harder parts are really, if you've got, let's say, a tractor and you're trying to allocate hours between maybe a farming operation and a cow-calf production system, that can be a real challenge, but certainly doable. So another question here from Michelle. What are a few specialized systems you recommend using for managerial accounting? So are there any other software or systems out there that you're aware of?
Yeah, I wish I was a better expert at that. I'm really not. So I really couldn't give you a recommendation on what software to use.
Super. Yeah, lots of questions on the computer side. So you got their attention, Adam, to get busy collecting some financial data. So that's great.
I'll tell you, Bob. I know our Rabo AgriFinance has been very interested in this space to help improve it because it has been a very big problem. I know we've partnered up with a new venture called Conservis, which is actually working on helping farmers get better analysis off the data that's coming off of the farm. But that's I don't know how that relates specifically to the cow-calf operation, and I know there's lots of software out there, but I'm definitely not an expert on.
One of the other ones that just comes to mind here is I know there's a number of states have farm management associations. So here in Kansas, we have one that works a lot with producers to sort of help not only capture good production-based data, but really drive that to financial analysis and finance management. And so, for those listeners out there, your state farm management or ag econ, your land grant institution may have some great extension programs to help you build those data sets and timelines for your operation. Another question here, Adam. This one's more kind of on the accounting side. Is the accrual method or true cash flow the best way to measure profitability?
Yes, I would say so. It definitely, on a cash-based accounting, you're really not going to know. You'll know if your checking account goes up or down, but you're not going to really know if you're making money sustainably. So accrual profitability will be able to tell you that.
Yeah, great. Super. Well, that's the questions we've gotten posted up so far, Adam. We'll keep an eye out if you're able to join us through the remainder. We'll, if we get some more there, we'll try and type answers out and get those questions answered. Again, I think for our listening audience, a kind of a new area of topic for our young producers, but one certainly as you all can see now, moving forward as young folks get into the business, the sooner we get our arms around the finance side and the opportunities and challenges that presents, the better off we are. And so, Adam, thanks again, and we really appreciate your engagement with our audience, and look forward to hopefully when we're back to Florida in a couple of years, I hope you can join us for the in-person meeting too.
Yes, that sounds great. Thank you very much for having me.
Great. Thanks, Adam.
The state of Iowa and Iowa State University are proud to host the 2021 Beef Improvement Federation Annual Research Symposium and Convention. The convention will be located in downtown Des Moines with easy access to the airport, hotels, and local restaurants. Iowa State University is just north with its research and teaching farms. Join us in Iowa and experience how Iowa provides the beef industry with innovation to application.